So, hi everyone, I hope you're doing well and that you are in good health. Today is Financial Friday, and as always, it's a chance where we get to talk about money. And I'm super excited to be here and share with you something about money. So, I'm gonna give us a few minutes for more people to join in before we can start. So tag your friends who are already in the group. Let them know that we are having a live session where I'm gonna share on how you can invest in money market funds. This is following the many questions I've always gotten from members in this group on asking how to invest in money market funds. Meanwhile, you can type in the comment section where you're watching this live video from, and what are your expectations, and any general comment you might be having, or how you would want us to make Financial Friday more beneficial to you in the platform. I would also like to thank our founders, Mr. Diane and Mama Kelo, for founding such an amazing platform that has transformed thousands of lives globally and built people holistically. So we really, I personally thank them and honor them for creating such a noble platform and being our vision bearers. Not to forget our amazing moderators who are always working to see the group is running as per the vision and mission, as well as the subgroup admins. You are doing an amazing job in the subgroup. So tag your friends. Remember, the topic for today will be investing in money market funds. This is a question most of you have been asking. Sheila, how can I invest in the money market funds? What is needed? What do I need to do? I'm interested. How do I go about it? That is the question I'm going to tackle today. So keep joining in. I'll give us up to 4:10 p.m. East African time. Then we can start right away. For those who might be wondering, my name is Sheila Mboga. I am a financial literacy advocate and a consultant, and as well as the founder of Financial Wellness Center, which is an organization that is focused on creating financial literacy awareness as well as investment management for individuals and companies. We have so far reached to thousands of people globally, and we specifically use digital channel to provide our services. We also do hosts YouTube show every Wednesday at 9:30 p.m. East African time, where we get to have a session with various experts in the business and finance world, where they get to bring us their nuggets or share with us their wisdom. So I would also encourage you, if you are struggling in any area of money management, you may check out my YouTube channel, Financial Wellness with Sheila Mboga. Get to watch the videos there so that you can acquire some wisdom or knowledge about money. Remember, money is something we cannot avoid because we use it every day. You need money to buy food, you need money to move from one place to another, you need money to be online, you need money to basically do almost every other thing that we do in our daily lives. So learning how to manage it should be a priority in your life. So I think we are set to go. Remember, you can ask your question in the comment section. You can drop a hi and let me know where you're watching this video from, and most importantly, I would encourage you to invite your friends, tag them, so that we can get to learn together about investing in money market funds. So I'll start with defining what a money market fund is, how did they come about, and just to give us a background to help you understand. I always say, before you commit your money to something, it's important to get knowledge about it, because when you have the knowledge, you are able to make well-informed decisions and know what to expect, so which kind of reduces your risk level, or risk level, because you know what you're doing, as compared to someone who just does something out of pressure or just because they think they have to do it. So, and again, from a scriptural perspective, the word of God tells us, my people perish because of lack of knowledge. It's not because they have Satan, or not because there are demons, it's because of lack of knowledge. So that clearly tells you knowledge is very important. Knowledge about anything that you are interested in. And I think that's one of the main goals of this group, to create knowledge about marriage, knowledge about relationships, knowledge about what you can do as an individual to live a victorious life. So knowledge and action is power. So yeah, we'll start. As I mentioned earlier, I would like to really thank our admins for creating such an amazing platform. I also like to thank our moderators and subgroup admins for the amazing work you're doing behind the scene, and as well as thank every member who is in the group. Your presence makes the group more amazing and lively, and to everyone that shares content. Personally, I go through almost every content posted in the group, and I can say some of you really have vast wisdom on certain areas. I have benefited a lot. Now, investing in money market funds. So what is a money market fund? A money market fund is it's a form of unit trust. It's a form of unit trust that forms under the collective investment scheme. So you could be asking, what is a collective investment scheme? A collective investment scheme is it's basically whereby different investors come together, contribute money in one account, and then give it to a professional money manager who invests on their behalf. So for example, you and your 3 friends in the group. So let's say you have friends in the group who are called, let's say, Mary, John, and Peter, just randomly. Now you both come together and decide, we are going to contribute some money and then give it to a professional money manager who is going to invest on our behalf. Now that action, or putting together the money and giving it to someone to invest on your behalf, is what a collective investment scheme is. Now, there are 2 types of collective investment schemes. So the first one is mutual funds, and the second one is unit trusts. Now, mutual funds are investment vehicles made up of a pool of money collected from many investors governed by a company act. So that is a mutual fund. It's a corporate body like a company. Now, when on the other hand, unit trusts are investment vehicles made up of a pool of money collected from investors governed by a trustee act. So that's the difference between, you've had mutual funds, you've also had about unit trust. So the difference is, for mutual funds, it's governed by a company act, while a unit trust is governed by a trustee act, and they all fall under the big umbrella called collective investment schemes. Now, most people have not come across mutual funds because it's not that popular, but we have interacted with unit trusts. Now, under the unit trust, this is where we have things like money market funds. This is where we have equity funds. This is where we have bond or fixed income funds, as well as balance funds. So if you hear someone telling you, oh, I'm in money market, I've done money market funds, I've invested in money market funds, I've invested in equity funds, I have invested in bonds, I have invested in balance funds, basically they are talking about having participated in unit trusts. And that is what is super famous, very famous with people, or most people have interacted with, as compared to mutual funds. So just to reiterate, there's a difference between a mutual fund and a unit trust. A mutual fund is governed by company acts, while a unit trust is governed by a trustee act, and it's under the unit trust that we have money market funds, which is our topic for today. Now, of course, depending on the feedback that I will get from this live show, we can get to discuss the other tools that fall under the unit trust, which I've mentioned are equity funds, which are basically shares of the stock market, and we also have the bonds, or like the government treasury bonds, the corporate bonds, treasury bills, they fall under that, and then we have the balanced funds. Now, our area of interest today would be the money market funds, which is very popular. A lot of people, you've either participated in it, or somebody has mentioned it in your conversation online or even offline. So yeah, before we can go in further, I hope you guys have registered for the Joy Fest, the upcoming Joy Fest. I believe today is the deadline for registration. So if you haven't registered, I encourage you to do that. Check in the group section, there's an announcement on top of the group. You can register for the Joy Fest event. I believe it's going to be an amazing event. So register. You can as well pay for someone if you're not going to attend, and you know, let's just, it's a very good event for networking. So register as much as you can, and as well invite as many people as possible. So as I said, a money market fund falls under the category of a unit trust. Now, I want us to understand, what is this money market fund? You know, I think 2 weeks ago I made a post where I said the easiest way to start your investment journey with the minimum capital is through money market funds. And so many people were asking me, how can I go about that? What is money market fund, and this how do we start investing in it? So that is one of the reasons that led me to doing this live show. So a money market fund, as I said, it's a form of unit trust. Remember, I mentioned what a unit trust is. They are the tools that are that fall under a unit trust, and money market fund is one of them. Now, in a money market fund, a professional money manager invests the money you put in it into different asset classes. So maybe you have, let's say, $100. Let's say not even $100. Let's just say $20. You have $20 and you put it in a money market fund. Then a professional money manager is going to take your money together with the money of other investors and invest it in different asset classes. Now, majorly for money market funds, they usually invest in 3 asset classes, namely commercial papers, treasury bills, and fixed deposits. Now, commercial papers are, they are issued by corporations to finance their short-term cash flow needs. I don't know if you've heard of, I've forgotten the name. Is it an ISO or something like that? Where a company creates a commercial paper and asks people to buy the paper so that they can get cash flow from the public. Then we have treasury bills. This is where the government borrows money from the public. And then we have fixed deposits, which are deposits in commercial banks. So a money market fund is where once you give them your money and other people bring their money, the money manager is going to invest in these 3 asset classes. And these are what brings about the interest that you hear. Oh, this money market fund is giving me 10% interest, is earning me 9% interest. It's because they have invested in these 3 asset classes. Now, these 3 asset classes, they are short term, and that is why you are able to access your money in a money market fund very easily. Most of the time is within 24 hours to 5 working days, because the assets they invest in, they are short term, so it's easy to get access to money easily compared to long-term assets. Now, I want us to think of money market as a big pizza yeah, or a big cake, a big cake that you, when you buy a slice of it, when you can cut a cake into small pieces. Now, if each of us takes a piece of that cake, in essence, that is what you do when you invest in money market funds. It's a big pie whereby everyone who invests money in that tool, they are getting a piece of the commercial paper, they're getting a piece of treasury bills, they're getting a piece of fixed deposit, because that is what makes it a money market fund. Or I would say a money market fund could also be like a big pie that's composed of commercial paper, treasury bills, fixed deposit. So anytime you're buying a money market fund unit, you are getting a piece of each of these asset classes. So what you could be asking, what's the role of a professional money manager when it comes to money market funds? His role is basically to allocate the money you have given him and many others into these asset classes. So for example, if me and someone like Mary, Joanne, and Peter come together, we've put our money together, we've given it to a certain company, an asset company, and we've told them we want to invest in money market funds. This company will get their money manager to take up the money, and he is going to allocate that money. Maybe he will say, okay, 20% I'll put in commercial papers, 30% I'm going to put in treasury bills, and then 40% or 50% I'm going to put it in fixed deposits, so that I get once I earn interest from these asset classes, I'll be able to pay Mary, Joanne, Peter a share of that interest that is earned, while still keeping their principal or their initial capital. Now, I usually say most of the money managers who are in charge of the money market funds, they are professional and they are always registered and regulated by specific authorities of the specific country. Now, each country has its own regulatory body whereby this the money manager must be registered, as well as the company that is issuing out this money market fund is also registered. So this body, each country has it. I think for Kenya we have the Capital Markets Authority, whereby it is the body that governs and regulates companies who run investments such as the money market funds. And the professional money manager that is going to handle your money is also registered and regulated on such a body. Now, you could be asking, now that I know what a money market fund is, why should I invest in it? Why not keep my money under the mattress, or why not put my money in a business? There are so many reasons why you need to invest in money market funds. And number one, we are heading into the festive season, and you would want to invest quickly or put money aside in a tool that you may not want to have access to easily, so you can put some money there, even money for Joy Fest, instead of there's a way money can tempt you when you have it in your hands. So if you already have some money that you've said, okay, this money I'm going to use it for Joy Fest, I would say you put it in a money market fund and then withdraw it. I know Joy Fest will be, I think, on 18th or 13th. Then withdraw it on maybe 10th or 11th, rather than staying with the money. Otherwise, you'll be tempted to utilize it. But that's just a sidebar. Anyway, why you need to invest in money market funds is because they are low risk investments. Of course, nobody wants to lose their money. You've worked so hard. Maybe you work for 5 hours, 10 hours, 8 hours, whichever hours you work. And then you go and invest in something and then you lose your money, all of it. It's very painful. So if you are a low risk investor, then money market funds is something you can consider. And then they are very safe for beginners. If you're just starting out, your investment journey, then I always say you can start with money market funds, so that you don't get sleepless nights thinking, oh God, I'm gonna lose my money. I've invested this money in this tool. So money market funds, since they are less volatile, they are a good starting point for anyone who wants to start their investment journey. Of course, as I said, nobody likes losing their money. Even me, I don't like losing money. So it's good if you really know that, okay, I'm so scared of losing money, then you can the money market fund is something you can consider. And another reason is money market funds do not require a lot of money to start. This is one of the best investment tools that almost everyone can start investing in, because you really need like $30. I mean, if you can eat pizza twice a week, pizza is usually like $10. If you can eat pizza twice a week, then you can honestly start investing in your third week. You can just decide, okay, I'm not eating pizza this week, I'm going to save that money so that I can start my investment journey, and I'll start with money market funds. As well as if maybe you're a student, if you're in Kenya, that's like 3,000 Kenya shilling, you can start investing in money market funds. So you can, even you can do some jobs here and there, then get that money and then start your investment journey. So it requires the most minimum amount of capital as compared to other investment tools that I know. For example, if you'd want to invest in something like Treasury Bills, you would need, if in terms of Kenya shillings, you would need like 100,000 Kenya shillings, which is like I don't know if it's like $10,000. So you see, that's a lot of money for someone who is just starting out their investment journey, and maybe their income is not that high. So this is an investment tool that all of us should actually be having. Honestly, we all of us in the group at least need to participate in this. Make it your goal. Even if you're going to save for 6 months to get the 3,000 Kenya shilling or the $30 or $50, do it and then start there. So those are the reasons why you need to invest in money market fund. As I said, number one, it's very low risk. Like, you won't lose your money. Chances of losing money in a money market fund is very minimum. Of course, there is no 100% investment tool that you can say you can't lose, but for money market, the chances are very minimum. And then because of its low risk characteristic, it's a very safe investment for someone who is just starting out their investment journey. And the other reason is you need the lowest capital. It doesn't need a lot of money to start, and as well as money markets are easily accessible. You can access your money within 24 hours to 48 hours. So that is something you can consider. And now that we are in a digital era, you can start the journey anywhere. We have mobile apps that for companies that run this investment, so you can access it anywhere in the world or wherever you are. If you are in your village, you can access it. You can access the app and do it. If you are in the city, you can access it. You don't have to struggle too much. Now, you've heard me mentioning a number of times that money market funds are very safe and low risk, and you could be asking, what makes them safe, or what aspect makes them to be safe than other investment tools? Now, before I can get to that segment, I would encourage you to share with me in the comments, what have you learned so far? Have you ever invested in money market funds? And of course, let me know where you're watching this live show from. Remember, today is Financial Friday. It's a day where we get to talk about money in the group and share our financial wisdom. So let me know in the comments what you've learned so far and where you're watching me from. The reason I said why money market funds are safe, because of some like 3 or 4 characteristics that I'm going to give us in a minute. So the first characteristic is the aspect that the money market fund is managed by a professional money manager who is regulated by a regulatory body of the specific country, which most of the time the regulatory body is a government entity. So this government entity usually has rules and regulations for companies that run such investments, which makes your money protected. This, as compared to companies that are not regulated by any government body, it gives you that safety net. So for example, if I know that, okay, I'm going to invest in ABC company and I'm going to tell them I want to invest in their money market funds, the manager who will be handling that pool of money, he or she is registered with the government entity of that country that regulates such kind of investments. So that gives you a safety net for your money. Now remember, in investing, most of the time we invest because we want safety. We want safety of our future, we want safety of our money. We just do it because we want safety. So the fact that such institutions, most of them, if not all, they are regulated and governed by a government entity, it gives you an upper and safety net. Now remember, the work of a professional money manager is to come up with investment portfolios, and they are the ones who are responsible for investing the money, but they do not have access to your money. So they will come up with a list. For example, a professional money manager will say, okay, I'm going to invest this money to, let's say, Treasury Bills, corporate papers, as well as fixed deposits, and then they tell the person who has access to your money, who in this case is called a custodian. Now, who is a custodian? A custodian is the bank that the investor sends the money to. So when you are the investor, remember, so you're going to send your money to, let's say, Bank ABC. Now this Bank ABC is the custodian, and the role of the custodian is to hold the money on behalf of the investor and release the money which is invested in money market instruments like commercial papers, fixed deposits, and treasury bills. Now this custodian, he or she also has to be approved by the governing entity. For example, in Kenya, the custodian has to be approved by the Capital Markets Authority. So what happens is, the professional money manager comes up with a list of what he wants to invest in, and I've said there are only 3 things that they invest in most of the time, which is the commercial paper, fixed deposit, and treasury bills. So he will instruct your custodian, who is the bank, to do the investing. So the custodian will release the money to the investment tool that the professional money manager has stated. And then at the same time, we have trustees. Now the trustee looks out for the investor's interest. The trustee has your interest at heart. Now the role of the trustee is he or she is responsible to be his responsibility is to be a whistleblower in case they suspect fraud or other forms of malpractice of the company you've chosen to buy MMFs from. MMF in this case means money market funds. Now they hold the fund manager and the custodian accountable. The fund manager chooses the trustee. Usually it's a bank or another financial institution, who are then vetted by the governing authority of that country. So for money market funds, there are 3 people who are involved in these investment tools. So the first person who is involved in it is the fund manager or the professional money manager, and then the second person is the custodian, and then the third person is the trustee. And these are different, they are different, not people, but they are different organizations. So the fund manager is from company. So let me give us a simple illustration. I want to invest in company ABC because I have seen them. They do have the money market funds option. So I will take my money to company ABC. Company ABC will tell their fund manager that we have this number of people who are interested in investing in MMFs, so you need to take up the role. Now this fund manager will come up with a list of what he wants to invest the money in. He will now notify the custodian, who in this case is a certain bank that is responsible of holding and releasing the money. And then these two people, they will be governed by the trustee. The trustee will be looking out, did this fund manager make a wise decision? Did he make or did she make a good choice? And then he or she will also look out for any fraudulent activities that could be happening in company ABC, and then he or she will call out. I believe we've had stories of company ABC is going bankrupt, or company ABC there is some fraudulent action taking place. Who does the whistleblowing? It's the trustee. So the fact that these three people are involved in a money market fund, it makes it a bit safer, because these are independent bodies. So it makes it more safer as compared to other investment tools. Now we also have the auditor. So remember, we have the fund manager, we have the custodian, we have the trustee, and we also have the auditor. Now the work of the auditor is to review the fund's financial statements. Now they usually check the statements to assess the performance of the money market fund. Now these levels of accountability is what makes a money market fund low risk. I'll give us an example. I'll say for example, you have Sheila Asset Management Limited, or let's say we have Financial Wellness Center as the asset management company. Now I will have to allocate a bank, or choose a bank that is going to be my custodian. So Financial Wellness is the asset management company. We are the one who are offering the money market funds in the market, but we'll have a custodian who is a bank that we will choose, let's say Bank ABC, and then we will have another bank, let's say Bank XYZ, to be our trustee, and then we can choose, let's say, something like Deloitte or PwC to be our auditor. So these people, they make their whole process or the whole investment tool to be more accountable, and this makes it to be low risk. Now you need to have knowledge of the fund manager that you pick. If you're going to pick company ABC, please make sure you have enough knowledge about them. If you're going to use a specific company to buy your money market funds, then have a good knowledge about them, and ask them. Always ask. If you're going to invest with, let's say, ABC Asset Management Company, and you want to buy the money market funds, you have the right to ask who their custodian is, know who their auditor is, and also know who their trustee is. It's your right. So don't just invest because you saw on social media people are investing and getting money or 10% interest. No, ask the fund manager before you can put your money in. So we go to what should you expect when you invest in money market fund, or what return should you expect? Now, usually most of the money market funds that I have seen, they give between 4% to 10% annually. Now, the interest rate depends on the fund manager. It depends with the company. Some people, for example, I just mentioned some of the companies that I know. We have, like, for example, let's say Britam, or let's say CIC. Each of these company, they have a different interest rate depending on what asset class they chose. So you cannot say that they will all have the same return, but it ranges between 4% to 10%. And then you could be asking, why should it be company ABC is having 9% and company XYZ is having 10%? The difference is because it depends with what the company decides to invest in, and that is what brings in the interest rate difference. So if company ABC is able to give 6% interest rate and company XYZ is able to give 10% interest rate, that means company ABC has chosen to invest in certain asset classes that are giving them a low return, while company XYZ has chosen to invest in certain asset classes that is giving them a high return. So it all depends with what the company chooses to invest in. But let me remind you that do not invest in money market funds with the expectation of getting extremely high returns. Why? There's a rule in finance that we usually say, the lower the risk, the lower the returns. The higher the risk, the higher the returns. So as I started earlier, I mentioned that money market funds, they are low risk investment tools. So don't expect to get high returns. Now, also you need to note that always check the average market rate. For example, I just said the average interest rate ranges from 4% to 10%. Now, if you find that there's a company that is telling you that if you're going to invest with them, they'll give you 20% of the same tool or of the same money market fund, then that is something you need to reconsider, because it could be they are not a genuine company. Because you remember, these companies, they only have 3 options to invest in. So even if there will be an interest rate difference, it shouldn't be higher. It shouldn't be extreme. You'll always find the interest rate difference ranging not much than 3%. Most of the companies, they will be playing around 7, 8, 9, 10, 12. But if you find a company that is giving you a different interest rate that's ranging up to 20%, then that's something you need to be cautious about. Now, I think I would also like to say that building wealth is a crock pot. It's not a microwave. It takes years. It takes being consistent. It takes discipline for you to build wealth. So don't get into money market funds thinking that, oh, tomorrow I'm gonna wake up a millionaire. No, it takes time, and you will have to do the same thing over and over again, and sometimes it's boring, but you'll come to notice the fruits maybe 10 years, 15 years later. And this is built upon doing the same thing continuously or consistently. Now, so anyone who tells you that you're going to become rich very quickly through money market funds, that's already a red flag. Red flags are not only in relationships. Even when it comes to money and investing, there are some red flags that you can see and know that this is not a genuine investment tool. Now, we go to the next section, and just to highlight, with money market funds, once you invest with them, the interest is usually deposited to your account every month. So the good thing I like about it is you are able to see the growth of your money. And the more you keep investing, for example, you started with 1,000. A year has 12 months. So if each month you're going to put 1,000, 1,000, 1,000, in 1 year you'll have deposited 12,000. And this 12,000 will have earned some interest. And then it will be compounded. So if you started with 1,000, then that month you get an interest of like 10%. That will be like 1,000, and after tax you'll be having like 1,085 in your account. Then the next month, if you deposit another 1,000, the interest that will be earned from that money again will be put in your portfolio. So you'll see like your money grows with time, and it's usually sent to your account. And now that we have mobile apps, we are in a technological era, so most of these asset management companies, they have mobile apps that allow you to see the performance of your investment. Now we come to the main thing that most of you, I know, you've been waiting for, which is how to invest in money market fund. Remember, we have discussed what a money market fund is, how they come about. So by now you know how money market funds come about, why you need to invest in them, and why they what are the characteristics that make it to be a low risk investment, and what you need to expect, as well as we've discussed about the interest rate or the returns that you should expect from investing in a money market fund. Now, how do you get to participate or invest in a money market fund? Number one, pick a professional fund manager. Now, a professional fund manager, it's not like like an individual. So I cannot say, okay, I'm going to do a money market fund for you. It's usually a company. And just as I mentioned earlier on, like in Kenya we have Britam, we have CIC, we have Sanlam, we have UAP, we have all those companies. Those are what you call professional fund manager. And usually, even in other countries, not just in Kenya, in other countries, they always advertise their offers in the daily newspaper. I don't know if you've always wondered, for a long time when I was young, I used to wonder, why should people buy newspapers and you're watching news on TV? Apparently most, especially investors, you will find most investors, they like checking out the newspapers because they usually check the adverts behind for money market funds. And these professional fund managers, they usually advertise their offers in the daily newspaper. My homework to you, go and check today's newspaper, or you can wait for tomorrow's newspaper and buy it, and then go to the back side. You will find all the professional fund managers listed there, and they usually also indicate the interest rate they are offering. So from there you can make a choice. There are so many. I think like 10, or like not less than 5. There are so many. So your work, when you check them at the back of the newspaper, not the football section, before you get to the football section, you will find them there. Then you'll choose the company that you're interested in, and I'm not going to tell you like this is the specific company you need to invest in, but I'm trying to give us the knowledge and where to get it. So one way on how you can pick a fund manager is by you buying a newspaper tomorrow or today evening and check at the back side. I don't have the specific page in mind. You'll see the companies listed there. Now you can also download it online, and you download the report to see the interest rates so that you can make a good decision. And the thing is, they usually put the performance of the funds online and the trends in investing by various unit trusts. So this is something you can just always check. You can also check something that's called Collective Investment Schemes Report. It's always uploaded online. So instead of you wasting your bundles following some funny gist, why not download a collective investment report, and use it to see how these fund management companies or asset management companies are performing, so that you can, and the trends that are affecting them, so that you can make your own decision. Then the second thing you need to do after you've picked your professional fund manager, you need to complete the application forms and documents provided by this company. So let's assume you've gone online, you've checked them, you've bought a newspaper, you've checked, you've seen you've seen so many companies, you've seen the rates they are offering, you've seen the trending news, you've also checked out the online reviews. Actually, reviews help a lot. When you, for example, you've chosen company A to be your fund manager, you just type it online and see what kind of reviews do they have. So checking out reviews helps you to know what to expect. And I know, reviews are not always 100% what you could get, but it gives you at least a picture of what you are going to deal with. Then now, after you've chosen a company, the next thing is contact them. Once you contact them, they'll give you an application form to fill out, as well as the documents they need you to provide them. And as again I have just mentioned, we are in a technological world. You don't have to travel 8 hours to go to an asset company. You just do it online. You contact them online, and you let them know that I'm interested in investing in money market funds. Let me know how to go about it. They'll send you a form and they'll let you know the documents that they require. Now, usually they always require a passport or your ID copy, identification card, and then they'll require your PIN certificate, and they will also need your bank details. And some companies will ask for a copy of a utility bill just to complete your residential details. I wish I had a copy of the form with me, but it's a very simple form. So you will need to have your identification card, ID or passport copy. You'll need to submit to them your KRA PIN certificate. You'll also need to give them your bank details, because they'll need to be sending money to you, so there will be, in case you want to withdraw or you want to do any transaction. So you need to provide them your bank details, and some of the asset management companies might ask for a utility bill, like water bill, electricity bill, just to get your residential details. Now, it is in this section whereby some of the asset management companies, they might ask you to do a risk assessment, or they will carry out a risk assessment on you. Now, the reason they do such is because they just want to determine how much risk you can take up, which is something that will help them to know what to invest in, or not to invest in things that will keep you awake wondering, oh my god, where did they invest my money? Will I lose all of it? So that's why some companies, they go that extra mile to give you to carry out a risk assessment, just to understand your how much risk you can take up. And as I said, the best thing, some of these companies, most of them, you don't have to be there physically. You can do it online and everything will be good, especially for the diaspora community or those people who are not in their respective country. Now, after you've done that, the next thing is you need to give them money. Now, the reason why money market funds is something we advocate for anyone who wants to start investing is because it's not a lot of money. It's money that if you plan yourself well, regardless of what kind of work you're doing, you are able to pull together some money and invest in it. So you will need usually $30 or $50. You'll need such an amount of money to start. So usually the company that you choose will tell you their limit, and the most important thing is that it has an easy entry option. The low capital needed to invest in makes it easy for anyone to invest in it. So after you've picked up a money market fund manager or an asset company, you've contacted them, you've done your homework, they've given you a form to fill out, you've sent it to them. Now you need to give them the money. As I said, most of these companies, they've become digitized, so you don't need to be there physically. You can just pay the money either online or via M-Pesa or through a bank transfer, whichever way that works for you. Now, those are the only steps that you require to invest in a money market fund. Very easy, right? It's very, very easy. And now, there is something I need us to know. What should you look for when using a money market fund? This is something that most people ignore or they are not aware of, and then they end up feeling like they were cheated. They feel like, oh, they didn't tell me this. Of course, there are things that you need to look out for when you're choosing a money market fund. Number one is, remember, you've already done your online research, you've checked their reviews, you've checked the referral from your network. Now, you will also need to check what is their past performance. How did they perform 5 years ago? How did they perform 3 years ago? How did they perform last year? That is what you need to check. Now, usually, most of these companies, they publish this information on their website, or they can send it to you upon request. Now, most of us, we grew up being told don't ask questions. So we fear asking questions, even when it comes to money. And this is where most of us fail. Now, you need to ask them. And this information, the most interesting thing, we think like the company might not want to send to you, but you'll be surprised. Actually, when you ask for such information, the company is more than willing to provide to you. So check it online. If it's not on their website, ask them. Just tell them I need a record of your past performance, or help me with the report of your past performance. Now, another way you can get their past performance is through their government regulatory body. In this case, for Kenya, it's the Capital Markets Authority. You just go to their website, type in that company, and it will bring you the data. So you just take your time and check how they've been performing in the past. Then, the next thing you need to look out for is the minimum investment. Remember, these are different companies. They are being managed differently. So each company will have its own minimum investment and how what plan they do have. Because there are some companies that you have to top up every month, while others you just don't have to. So long as you've opened an account and you've put money, the initial money, it's okay. It's not a requirement. So check what's their minimum investment. Now, the good thing with money market funds is that there is no penalty if you miss to top up. So for example, you opened a money market fund with 5,000 Kenyan shillings, and then in the coming months you are not able to get that disposable income again, so you're not able to top up. There will be no penalty. They won't tell you like, okay, since you've not paid for the last 3 months, you're going to take away your initial capital. No, they don't charge any penalties. So that's an advantage, especially if you are someone who is, for example, like I'm in business. Not every day I get money. You get, not every month you will have profits. So if you do not have a constant income source, then money market funds is it's a good thing to take into consideration. Remember, and another thing, don't be lazy. Consistency is what will help you build wealth as well as enjoy more returns. So after you've found out their minimum investment, try as much as possible to be depositing something every month. Commit yourself. Just tell yourself, okay, in the next 1 year, I'm going to commit myself to be depositing 1,000 in this account. So God help me, and He will help you for sure. He will see that you're becoming a good steward of money that He has given you. So He will help you to always get that 1,000 every month. Then the other thing you need to check out is, what is the interest rate, and do they offer deposit protection? Check out what is their interest rate and if they offer deposit protection. Now, the higher the interest rate, the better, but be careful not to pick a fund that offers higher rates than the market average. As I said earlier on, they usually range between 4 to 10% annually. Now, if I come across a fund manager or an asset company that is telling me I invest with them in their money market funds and they're going to give me 30% annually, that's something that's not logical. It's above market average and it's way beyond. So always check out. And then have this at the back of your mind. Short-term investments, they usually have little interest rates than the rest. So and again, when it comes to short-term investments, there's very little a fund can do to differentiate its return from the rest. That's why I told you, like, most of these companies, they don't have a major difference because they are going to invest in almost the same thing. If they will all invest in Treasury Bills, trust me, if Treasury Bills has said that it will give 6%, they will not give 7% to company A and give 8% to company B. No, they'll give the same 6% to all of them. So the difference should really be very minimum with other companies. Now, if you find a company that is offering an extremely higher return, aside from being fraudulent or being kind of a con, chances would be they are pursuing an aggressive investment strategy that may put the investment at risk, and this is where you might lose your initial capital. So if just as I said, if I go to an asset management company and they tell me they're going to give me 30% interest return, and I know in the market it is ranging between 5 to 10%, then chances could be this company, if they're not con or scam, then they could be pursuing a very aggressive investment strategy that would put me at risk of losing all my money. The higher the risk, the higher the return. That's just a simple law. Now, I've seen a lot of people who have done this mistake. They invest in something that they have been promised a higher return, and unfortunately they lose all the money. You get? So whenever you see an interest rate that is way beyond the average market rate, it's always good for you to check what are they investing in. And a legit company will tell you, we are investing in A, B, C, and D, so that you can make a decision. Now, if the company you choose invest in high risk investment, you can lose your money or make very small returns because it's high risk. For example, if right now you choose to invest in the stock market, it's a very high risk investment tool. I'm not discouraging you, but you need to invest in it knowing that you can lose all the money or you can get more. You can earn a high return. So since it's a high risk investment, of course, returns are also high. Now, what you need to do, ask the fund manager for a list of their portfolio so that you know what they invest in before you give them the money. Don't just, because I've just said, oh, you just need 1,000 to start investing, you just go and tell them, take this 1,000, I want to invest in money market. No, ask them, ask them, what are you investing in? Can you send me a list of what you're investing in? That is your responsibility to do that. Then make sure that company that you choose offers deposit protection. Remember, one of the biggest hack when it comes to investing is to ensure that you get return of your money before you think of the interest. So if I'm going to invest, my first question is, if I'm going to invest 5,000, am I going to get back my 5,000 plus interest? So the first question I always ask, will I get this capital that I've invested in? Then the next question is, what would be the interest I would earn? So always check, does that company offer deposit protection? If I invest with them 5,000 and maybe the market does not perform well and I want my 5,000 back, will they be able to give it back, or they will take me into circles? So that is what you need to look out for. And then the other thing that you need to look out for is, how long has the company been around and how has it performed in the last 5 to 10 years? I always say it's safer to invest in older companies as compared to new ones, especially if they have a good track record. I'm not saying all old companies are good, but if a company has been in the market for 10 years and they are having a good track record, personally I would go for it compared to a company that has been in the market for 2 years or 1 year with a good track record. So check. I believe there are strategies that this older company might be having or knowing or applying that's giving them that result as compared to this young company. So always check. And then if a company has a consistent record of delivering what they promise, then it means they are a safer option as compared to one whose performance fluctuates over the year. So if a company is really, they have been consistent for 5 years, they are giving the same results, they are fulfilling their promise, I would definitely go for it compared to a company that does not fulfill its promise, its performance has been, fluctuating, and the level of fluctuation is, very high. Then I wouldn't risk myself. Then the other thing you need to look out for is, how much are their fees? Now, most of us, we don't check the fees. We are just like, I want to invest, I'm ready to invest, but we don't check out the administration fees that comes with investing in money markets. Now, the truth is, this thing is not done for free. Nobody is going to invest for you for free. Nothing is free, honestly. So, the fund manager or the company charges a fee for investing the money for you. Usually, the charges include management fees, processing fees, transaction fees, and sometimes penalties. Sometimes. Now, if you're not careful, these fees might eat up all your returns, which can turn the investment into a loss or time wasted. Now, before you can sign up those documents, read. Now, usually, most of the time, the average fee is usually 2% of the invested amount. So if I'm going to invest 1,000 bob, the fee that the company will charge me, it will be 2% of 1,000 bob. I've also seen some companies that give low percentage fee, like 1.5. If you would want to know, you can consult with me. But yeah, the fees usually range between 1.5% of the amount that you will invest. But as always, seek clarity with the company before giving them the money. There is no harm in asking. Ask them. At the end of the day, you're giving them business, so they should be in a position to assist you with the correct information. And then the thing you need to check as well is, what are they investing in? Don't just give them money blindly. Ask them, what are you investing in? Remember, as I said, when you are starting, money market funds, they usually invest in 3 asset classes. Number 1 is the commercial paper, number 2 is the Treasury Bills, and number 3 is the fixed deposits. So you can ask them, what are they investing in? Now, you don't want to invest, you don't want them to invest in high risk instruments that will lead to the loss of your money. So the risk assessment form they ask you to fill is what comes handy here. So ask them to share their portfolio. They will share it. That one is something I've done it personally. I do ask questions. So they will share with you their portfolio of what they're investing your money in. Then you can check and see if it's something you can work along with. Then the other thing you need to look out for is, can you easily withdraw your money? That is something we all need to check out. I've had clients who come and tell you, I put this amount of money in this tool. Now I'm in a situation that I need the money, but I cannot access it. What can I do? And I ask them, when you are investing that money, did you consider, or did you ask them what are their terms of withdrawal? And then the person like, no, I just thought, I didn't ask about that. I just thought like it's a good thing to participate in. Well, it's a good thing to participate in, but you're now in a situation you cannot withdraw the money and you need the money. So always check the company that you're going to invest in. Are you able to withdraw the money easily? How many times can you withdraw for free? Because there are some asset companies that allow you to only withdraw for free once in a month. So if you are going to withdraw 3 times in a month, the 2 times they will charge you. So you need to know how often are you allowed to withdraw for free, and how long does it take for the money to reflect in your account. Usually most of these asset management companies, they'll do it for within 24 hours to 48 hours, or some, just to be safe, it's usually like 2 to 5 working days you will receive the money. And again, know the cost of withdrawing. As I said, not all companies will give you the free one-time withdrawal per month. Some companies, they charge you for every withdrawal that you do, depending on their own administration policy. Then those are the things that you need to check before you can those are the things you need to look out for when you are choosing a money market fund. I will just highlight them. Number 1, you need to check their past performance. Number 2, you need to check their minimum investment. Number 3, you need to know what is their interest rate and if they offer deposit protection. Number 3, you also need to know how long the company has been in the industry or how long the company has been around, and how has their fund performed in the last 5 to 10 years. And number 5 is you need to know their fees. How much do they charge? What is their management fees? And then number 6, what are they investing in? Number 7, can you easily withdraw your money? Now, because of time, I'm gonna try to rush the remaining segment. Oh, this is too much. I just give us let me just see, because of time I'll give us the advantages of money market funds, and then maybe we'll find time to give the other maybe the disadvantages and the other part. Now, the first advantage of money market fund is the security of your investment. Remember, I said they are low risk, and usually they are licensed and regulated, so it protects your investment. Number 2 is they are a great way to store your money, which prevents you from being an impulse buyer or an impulse spender. So as I said, if you already have the money for Joy Fest and you feel like, oh God, if I continue holding this money, if I continue having this money around me, I'm going to spend it, then why not keep it in a money market fund? Then you withdraw like a week towards Joy Fest. So it's a good way to store your money, and it's also a good way to start saving or to put an emergency fund. Remember, we need to have an emergency fund, and one of the tools you can put your emergency fund in is the money market fund. And then number 3 is they offer an easy way to cultivate a saving culture. I've seen a lot of people who say, oh, I really struggle with saving, can you help me? And then I ask them, what tool do you use for saving? And some will tell you, under my mattress. Well, I know we all start from somewhere, but saving under your mattress is not a wise thing. I would say you consider saving through a money market fund, because your money will be at least safe and you will be able to earn some interest. So instead of putting money under your bed and constantly looking at it and being tempted, why not put it in a tool that is going to give you interest while the money is there? And then the other advantage is usually the money market fund is it beats inflation. Most of the time their interest rate is higher than the inflation rate. I think currently in Kenya the inflation rate is around 5 to 6% or 4%, not quite sure. And most of the money market funds are giving you 8% interest rate. So you're beating inflation. That is being smart. So invest in a money market fund because you're able to beat inflation and also make returns. And then the last advantage is, or the 5th advantage is, you only need a small amount of money to start. Remember when I started, I told I said that most of the investment tools that I am aware of, most of them require huge capital base. But with a money market fund, you can start with as low as 1,000 or 2,500 Kenya shilling. So this is something you can save up for in a short period of time and start out your investment journey. So and it also allows low income earners to invest in it as compared to other investment tools. For example, maybe you're just starting out your career and you don't have that much money, or maybe you're just doing you don't have a permanent income source, or maybe you have a lot of responsibilities, you don't have a lot of disposable income. Then a money market fund allows you to start with minimum capital that can help you earn some interest. And again, lastly, this one, it's the ease of access to your funds. I can tell you for free, other investment tools, accessing the funds is usually very hectic. You have to let them know, and others, they cannot give you access until maturity. But for money market funds, within 2 to 5 working days, you should be able to get your money. So this is something you might consider investing in, especially if you're somebody who who might be needing the money under short notice. Or if you're saving for an emergency fund, remember, an emergency fund helps you take care of emergencies that may arise that you had not planned for. So if you have money in a money market fund, you're able to easily access it. Now, this brings me to the ends of today's live show. I hope you've learned something, or you have gained some information. I will try my best and see if I can get to do the part 2 of this same topic, because I know you are wondering, okay, what is the disadvantage of a money market fund? And the other thing you could be asking yourself is, how can I use a money market fund to my advantage? Those are the other things that if God helps me, I would come again live to do it. But for now, I want to appreciate you for being here with me. We've taken 1.5 hours. I was thinking that I would be able to cover money market funds and maybe treasury bills and bonds, but unfortunately time is not on our side. But I'm so happy we've been able to know what a money market fund is. Now, if you have any question, if you have any comment, you may feel free to type in the comment section. I will be reviewing the video later on and answering your questions, or taking in any comment or anything that you would want to know regarding money market funds. Until then, thank you so much for staying here with me for 1.5 hours. That's a lot of time, and I believe you have learned something, and the most important thing is you're going to put it into action. Until then, God bless you. I'll see you next time.